Hi everyone, and welcome to Sunday Shots by Journie. Let's start with a simple question. If central banks are cutting rates, why doesn't this feel like a normal easing cycle? That's the story we're unpacking this week. Every time the US Federal Reserve speaks, markets pause, screens light up, expectations shift. Everyone waits for that one line that might tell us where money is headed next. This week, the Fed did cut rates by 25 basis points. But instead of clarity, the message felt restrained. The Fed made it clear that future cuts will be slow, cautious, and completely data-dependent. In other words, yes, rates are coming down, but don't expect momentum. In past cycles, once cuts began, liquidity returned quickly. Markets rallied. Risk appetite picked up. This time, the cut didn't feel like a cut. Because investors weren't reacting to the number, they were reacting to what it implied about liquidity ahead. Now here's where the story gets more interesting. While the US is easing carefully, India has been telling a very different story. Last week, the RBI cut rates by 25 basis points, but from a position of strength. Growth is steady, inflation is manageable, external balances are stable. This wasn't a defensive move. It was a strategic nudge to support momentum. So yes, both the Fed and the RBI have cut rates, but at different moments, for very different reasons, and with very different tones. And that divergence is exactly why this rate cycle feels so unfamiliar. Markets today are also far more sensitive than usual. Every inflation print, every jobs report, every sentence from a central banker, it all gets interpreted through one lens. What does this mean for future liquidity? This isn't just an economic cycle anymore, it's a behavioral one. And that brings us to this week's idea, the patience premium. In earlier cycles, speed was rewarded. Move early, predict the pivot, capture the upside. This time, the real edge belongs to those who can wait. Wait for clarity, wait for liquidity to stabilize, wait for the noise to settle. Patience isn't passive anymore, it's strategy. So what does this mean going forward? Volatility isn't a sign of trouble. It's the texture of a market in transition. The smartest investors aren't trying to guess the exact month of the next cut. They're preparing for the environment that emerges once the noise fades and the cycle begins to reveal its underlying shape. Until next Sunday, here's to staying patient, staying grounded, and seeing the cycle beyond the headline. Thanks for watching, and we'll see you next week on Sunday Shots by Journie.